Hello and welcome to the Halifax Real Estate Podcast. I am your host, Jason Paul, licensed realtor in Halifax since 2017 and team lead of the Infinity Real Estate Group at eXp Realty of Canada, Inc. This podcast was created to help you understand a little more about the Halifax and Nova Scotian real estate markets. If you like what you hear, I would really appreciate it if you hit the subscribe button. Thank you so much and enjoy the show. She's gonna break down the door. Okay, welcome back. It's been a month. Welcome back.
Actually, it's been 20 minutes, but yes.
We have
It's 20
tried.
minutes when we first started this.
It's been 40 since we first started this. It's been
That's
40
true.
minutes.
That's true.
We have tried to record this episode for the last month, but my in-laws were down for 3 weeks, and I recorded in my house, so no chance of that ever happening.
Life happens.
We have changed this topic 3 times. So the
So now we're
first
just going to
topic was going to
combine
be
multiple topics.
we're just going to do a catch up and go through the highlights. The first topic was going to be 2026 mortgage consumer CMHC's mortgage consumer survey, which like last year was really fun because it was frightening. This year is very less dramatic, so we will not be spending long on that because there's a few things in there that I'm like, I can talk about that. The second topic is you have an update on the 2% down payment program by Credit Union in Nova Scotia, and I cannot wait for that update. And then the most meat on the bone topic is the Vancouver or BC condo bailout by the federal government. And we are using the word bailout while the federal government is using the word buyout. So that one I'm very excited for because I've actually I have done some note taking on the actually I have note taking on all of them except the 2% program because that's just your little nugget. Okay.
You know I like to fly by the seat of my pants and just say whatever comes to mind anyway, so fuck it.
You have more notes than I. You usually bring more notes than I ever do to these podcasts. Okay.
I have Cole's notes.
What do you think? You think I actually have like written? No, I have Cole's notes. Okay.
Yeah.
2026 CMHC Mortgage Consumer Survey. I found something interesting. Out of 100, they surveyed 4,400 people. 66% renewed a mortgage.
Yeah.
19% refinanced. It's like 85%. So like out of all the mortgage transactions taken in 2026 or in the last year, 85% went to renewals and refinancing.
Well, and that's the big renewal wave they've been talking about for the last number of years, right? So like if you were on that 2021 5-year fixed wave, you're renewing in 2026, right? So for all those 2020, 21, 22 folks, the next 3 years, I think it was like an enormous percentage of the mortgages in Canada that are held are coming up.
The statistic was like 60% of all mortgages in Canada were up for renewal between like it was like the Q3 25 to like Q4 27. Because you have to get from 21 to the
26, I think, is like the apex of them, and then it kind of comes down. But it's still like, again, and it's just a tremendous number. It is
26 is the apex. Because 5 years ago the market was absolutely stupid fucked.
Yeah, and again, so like in the numbers you're seeing, it jives. 60% of the respondents are renewal, but then the other 20% or 19% doing the refis. That's just folks with the debt levels, right? Like we are incredibly indebted folks, right? So.
Which was the highlight of last year's podcast was how indebted people are. Out of them, 11% of first-time home buyers, 5% repeat buyers. I found that one really interesting. 5% out of that whole number, repeat buyers. That's a very, very, very small amount of people buying homes. Now, once again, 4,400 surveyed, so 5% of the 4,400 are repeat buyers. Maybe repeat buyers see that survey and like, fuck it, I'm not doing this.
I think the repeat buyers see a lot of other things in the economy and think, fuck it, I'm not doing it. Right. Like, there used to be this like upward mobility. Okay, I'll get this house and then I'm going to upgrade and then da. I think now there's such just out of whack in the pricing and the affordability level across the board for everything that folks are just like, listen, as soon as I get that bigger house, cool, my property taxes are going to go fucking crazy. And so I'm going to be paying double what I already pay. And that's already gross. And so like,
Yeah.
that's a thing, and you've got the cost for everything else. So I think some folks are just like, do I really need to have an Eastern wing or, a dedicated dining room that we only use at Thanksgiving?
Okay, on next one that I thought was really interesting. 35% of renewals face higher mortgage payments. On
I'm surprised it's that
average,
low.
the average increase is $375 a month. I thought
Yeah.
35% of increase is low, and I thought that number is lower than I thought it would be.
Yeah, the increase side kind of strikes me as a low number. Um,
Yeah,
the payment shock doesn't surprise me. Like the folks I'm
I
talking
thought
to
that'd be
that are in
higher.
a
I thought both
eh,
those numbers would be higher.
the
I
the
really did.
the folks, a lot of the folks that I see are coming out of like that 1.45 range, 2 point something range. So like,
Yeah,
and obviously we're not there anymore.
yeah,
But also I think some of what's dampening that number is some folks are breaking early to deal with debt. So I
yeah.
think
Of
some of
course,
that is that 20%, right? So they're not necessarily coming out of a terrible rate environment as compare, you know what I mean? Like such a big swing. Um, but yeah, that strikes me as a little low.
you'll love this one. 39% of people are making extra mortgage payments to pay down debt.
Yeah, good, smart.
Yeah,
And
yeah,
I give the credit selfishly to the broker channel.
yeah. Of course, you should. You're the only one
Yeah.
talking about it. You're the only
Because,
one.
I think most folks, we're seeing definitely an uptick in folks that engage with a mortgage broker, which is phenomenal. Not to say
Yeah.
that bankers aren't good people and don't have your best interest in mind, but I think there's just a bit more of a tailored approach when you go to a broker, and they could tell you some of the nuances that maybe the banks just don't because whatever, or they may touch on it, but they don't really emphasize it.
I'll give you.
It's
I'll give you.
very much an
I'll give you the.
emphasis for me.
I'll give you the best one. If you go to a new builder, new construction house, and you meet the realtor who's selling a new construction, they can only sell you new construction.
Mm,
If you're going to that builder to build a house, right? They can only sell you the plans that they have built. If you have a realtor that is representing you and not the builder, they can shop around for everything. It's a more tailored approach. It's a little more nuanced. Yada
yeah.
yada yada.
And I think there was there's and again a lot of folks. The other thing too is like when you're renewing your mortgage, you've got your last mortgage statement and you're just like, oh shit, I've only got like, 15 years left on my mortgage. Well, then you have to renew. And so if you renew an increase, you can keep that term, or most likely they'll bump it back out to 25 years. Well, then a person instantly is like, well, frick, I lose all that last 10 years that I had gained. And so then that's instantly when the conversation changes for me. And I'm like, cool.
Yeah.
If that's the goal, awesome. We're going to do accelerated payments.
Yeah.
Here's your prepayment schedule. Like, let's hit every one of these because then you can
Right.
accelerate it that much faster. So
28% of buyers need a cosigner, which is down from 35% last year.
I
One in
think that's,
four.
I think that speaks to probably less activity in the market. not
100%.
not necessarily that people all of a sudden are flush with cash. Um,
100%.
yeah,
Oh, I got a stat for you from this mortgage survey that'll tell you how flush with cash people are. Home buyers, first time home buyers took 4.4 years to save the down payment to buy their house, up from 3.4 years last year.
that
It
jives.
increased a whole year.
Yeah, that jives. Yeah, well, because nobody's got like the disposable income, and that's the thing that always kind of gets me when you look at these first time home savings accounts and tax free savings accounts, and like, oh, but your limit is $6,000 and $8,000 a year, and I'm just like, well, hold on a second. Are you coming from the premise that I just have an extra $6,000 to $8,000 a year? Like, I don't know a lot of folks that
Just have that
just are
money
like,
sitting.
oh yeah, you don't have an extra couple of grand laying around. I think it's quite the opposite.
80% of people surveyed are confident they can make future payments, which if you think about it, that means 1 in 5 are not confident. Just, ju
Yeah, that maths. I would. I mean, I would hope that 80% should feel confident, right? Because as you're doing your numbers, you understand where your ratios are at, you understand what your budget's at. So, like, if it's being presented to you properly, you should be confident that you can. Now, of course, anything can happen in the future, job loss, whatever. Um, but if you're not walking out of out of a deal, or at least understanding throughout the deal what your budget level is and what your confidence level is to be able to maintain that,
Yep.
it should be really high on the list of understanding, right?
72% are comfortable with mortgage debt. That means 3 out of 4. So 1 in 4 are not comfortable with their mortgage debt.
Sorry, what was the context of the sentence? Are comfortable with mortgage debt or with their mortgage
Yeah,
debt?
with their
Like
mortgage
theirs
debt.
as in their own.
Yeah,
Yeah.
yeah, yeah, yeah. So 1 in
I
4 is
think it's
uncomfortable
just
with how
one of
much debt
those.
they have.
I think the 3 out of the 4, it's just we're all programmed to know that eventually you're going to, or we have been programmed to know that, okay, one day you'll grow old and get a family and buy a house and have a mortgage, yada, yada, yada. It's kind of like the natural progression of things. So I would say 3
Yeah.
out of 4 are coming from that lens.
Yep.
But the other 1 out of 4 are kind of like the folks like myself who are like, wow, holy crap, that's a disgusting mortgage payment for the house you just bought. Oh, wow. And your property taxes are double that. That's extra disgusting. So, like, two things can be true.
Oh, yes. Oh, yes. I'm just here giving out stats and giving highlight to it.
Yeah.
44% of buyers used equity for down payment. So they
Oh,
traded
yeah.
debt for debt.
Yeah.
Someone bought a house in 21, went up a lot in value,
Yeah.
thought, "Oh, I can sell this and I could buy I bought a $350,000 house. I can sell it for 6,
Yeah.
5 years of ownership, pay it down 35, 40 grand. If I use accelerated payments, maybe a bit more. I can then trade it for a $900,000 house and do a large $350,000 down payment. Now I got a 550, $600,000 house that I can comfortably make the payments. So that's classic. That's just people trading debt for debt.
100%.
Yeah. 52% paid maximum they could afford, which is down from 65%.
Paid
That's
maximum
it
that they could for their mortgage.
yeah.
Yeah.
Yeah. 50
I'm
52%
glad that has come down.
52% of people have taken it to the max, which is down from 65% last year. So
It's probably one of my most favorite sayings when I do my videos with folks. I'm like, here's your pre-approval number. But much like the Eagles have said, you do not have to take it to the limit. Like, there is a limit, but like, don't take it to it. And then that segues into the 2% stuff too, right? That's why, again, I don't like that program, just because
I got 2
not
more
only,
stats, and then we can rip that thing to shreds. I got 2 more. Just hold
I'll
off.
be gentle, but it's just, it's part of the problem.
27% received a gift for down payment, down from 35%.
Yeah, it's still there's. I mean, every second file, I see some form of, whether it's retained equity from a house that they're selling or they're moving or whatever, or it's gifted funds. It is
Mm.
absolutely gifted funds, because nobody's sitting on it. Is
No one has that capital. No,
I've had several unicorns this year who have absolutely been stashing it away, and they've been rock solid, and it's great. However, they're the folks that have the ability, they're living in their parents' house or their in-laws' house, and it's rent free, and they have that mobility and ability to stash the money aside, right?
this is probably the craziest one I've got, and I just can't wrap my head around this. 13% of repeat buyers received a gift. And I just you bought a house, it went up in value, and then you need a gift to buy another house.
The thing is, the the report is from across Canada, so I think
Yep.
some of that may be Ontario, or quite a lot of
A,
that is Ontario, where
a
it's like the
lot of that's
prices have
Ontario.
dropped, and then all of a sudden they're behind. You know what I mean? Like, the equity isn't there that they thought they'd have, and so then they're bridging the difference with a gift.
All in all, that's all the highlights I got from that consumer report, because last year was scary. The one we did last year was terrifying. It was like everyone's in so much debt, everyone took their purchasing power to the max. Everyone thinks their home value is going to increase, which conveniently they took that question off the survey this year of, do you think your home will go up in value? That question was not there.
Yeah.
I wonder why.
Yeah. Yeah.
This is a much better reading. Less people are taking gifted down payments. Less people are comfortable with their mortgage payments. People are not spending to the limit to get into housing as much as they were last year. All in all, this just reads better.
I think yeah. And I would say too, that it just kind of, it outlines that I think people are also being very aware of the other things in life that cost them money, right? Not
Groceries?
just like, yeah, the cost of everything else, and that strain, and factoring all that in. I think people are just becoming more aware and conscious of their own budgets, or at least having a budget, like holy frig. Um,
Well,
which again is,
inflation has arrived. We've now come to fully realize all the inflation in Canada.
yeah, yeah.
That is, yeah. And okay, now, I mean, honestly, that report, like last year, we did a full hour and a half on it because there were so many things you could talk about. This just it's crazy to say that because Canada is statistically in a recession, despite what the government's saying, 2 negative quarters. But this CMHC consumer report reads much better than last year's, and we were not in a recession statistically last year. So, all in all, housing looks better, I guess, from this lookout. We'll get into the Halifax market, I'm sure, and rip that to shreds, but, you know give it
Yeah,
time.
I think, I think some of the doom and gloom that they talked about when it came to the renewal wave and stuff like that didn't necessarily happen. So that's
I
kind of been good,
the the For the average payment to go up $375, I just wanna be clear, anyone that predicted that the market was gonna crash because of the rate hike, you got that horribly wrong. Yes, there will be
Well,
outliers, yes, there will be people who will be punished by the rate increases, but it's not in the droves that you think.
no, and to me, well, listen, my thing is, I go back to the stress test when it comes to this.
It's a stress test.
The seatbelt worked. And so for me, it's like, oh my God, I went to a presentation last month. I was the only finance guy in the room. And somebody stood up and they was talking to a stats guy, and they're just like, well, what's the government going to do for affordability and da 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 da. And like, well, why don't they scrap the stress test? And I'm like, you need to go play in traffic with your eyes closed, because if you think that, you know, removing the stress test is going to do anything other, like, it's not going to change affordability. You know
No,
what I mean? Like, I don't on a
it's
file say, "Oh, no, this purchase price is fucked because, like, well, your stress test." No, I look at the client and say, "Hey, these numbers are telling us that if we put you into this purchase price with what you make, you will be financially strained. And if the wind blows in the wrong direction, you'll be financially fucked." So to me, I'm like, that is exactly what it's there for. It's a seatbelt, right? And so, like, for those that got the rates at 2% a couple of years ago
they should be
and were
so grateful for
stressed
the stress
at
test.
4, right?
Yeah.
Like, this is where we are
Weren't they
now.
stressed? Okay, weren't they stressed at 5.5 though? Like if because the gap is like the stress test is like if you're qualifying at 2, it has to be within 2%, but if it's still under 5, like they stress test you at 5 and a bit, didn't they?
Yeah, like, it's usually 2% over the posted whatever it is
Yeah.
you're doing, right? And
Yeah.
so, but again, it just puts in that breathing room. So, like, all of a sudden,
It's
I'm like, okay, so
it
you wanna take out the one safeguard that we have on that side of the equation to what? Allow that
if
client to buy that purchase price that's probably too high to begin with? Like,
if we didn't have the stress test, the whoever all the doomsayers on rate increases would have been right. Because in that market in
a
2020,
million percent.
2021, and 2022, people could not restrain themselves. And like, listen, realtors were in this
No.
mix too. I was in there. I was in the market. I wrote those offers. We were all everyone was in that kiddie pool of like, oh my god, there's 100 offers here. Take it to the max. Um, if it wasn't for the
The whole
stress
thing is an
test, the
emotional.
whole thing.
Yeah, like the whole real estate in general. Like I love when we try to apply logic to an illogical thing, right? Housing, buying, purchasing real estate, there's some logic to it, but it's really an emotional roller coaster is what's really driving everything. You know what I mean? When it comes
Yes.
to, well, I sold it for this, and well, I mean, I want to sell it for this, and well, I bought for this, and so I should buy for. So it's very much like it's not necessarily that the economists are driving the process. So like when you look at it that way, there needs to be some type of guardrail because you're right. If all of a sudden back when rates were super low, fuck me, like the prices could have went wherever. So like there has to be some type of guardrail put in place to be like, all right, if the economy does go in this direction, what's that going to do to the person? And so yeah, I think if anything, it just speaks to leave it alone. Do not get rid of the stress
Leave it
test. Like,
alone.
cause you never know what's going to happen with rates. Right. And so, but the fact that like there's not a huge uh delinquency wave, and yeah, the numbers are up, but they're up in small percentages.
It's like
It that works.
0.001 going to 0.0015.
And listen, anybody going delinquent or anybody losing their house, it's brutal. It's
It's
it's it's
sad.
it's
Yeah,
absolutely brutal. And like, but again, I think it would be way, way worse if there wasn't any
if
type
it
of a stress
wasn't.
test in place that
Yeah,
it was
yeah.
just a free for all.
Kudos to the stress test. Okay, on my next favorite topic. 2% down payment program. Where are we at with the Nova Scotia 2% down payment program announced back in February that people said would be a game-changing program, and realtors said, call us today for the qualifying on this. Where are we at 4 months later with the 2%
Uh,
down payment program?
that's right. I forgot about the game changing comments. Oh, frig. Yeah. Yeah. It's not, listen, it's been a solution for a few folks. And when I say a few folks, I mean about a dozen. Right. So when I talk to my contacts at the credit unions, because I had one, but we were engaged on a file, and I'm just asking questions. I was like, so how has this been? And da 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 da. Da. And it's like, yeah, province wide at the time when we talked, 12 files were funded, 12
In Nova Scotia.
in all of Nova Scotia across all of the banks that can do it.
So
Right.
12 people, 12
12,
people.
12 houses. And again, it's because the guidelines are strict, and it's not a one size fits all. It's, it is. The ratios drop, the debt low, the debt ratios are different, your credit guidelines, the whole nine yards, the income side of things. And like, again, like back to one of the comments you made in the CMHC, you know, report, um, talking about equity in your house and having that ability to leverage that for the next thing. That's not going to happen in the immediate future with the 2% down program. Right?
No.
Like you're not even at a minimum down payment at that point. You're at 2% in. And so, and the other thing too is the timeline. Like the timelines are brutal. And I know in real estate, nobody likes timelines. Like I talked to a colleague in Manitoba, and I probably shouldn't say this, but I talked to a colleague in Manitoba, and they get 24 hours for financing on houses. And I was like, what? And yeah, a 24-hour time frame window on housing. So like, don't tell your colleagues because you'll cripple us. But um,
Don't put
but
that in the
when
universe. You're going to start
yeah,
getting realtors
I
wait
was like,
24
and I said
hours.
that to her, I was like, no, 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 no. I was like, not happening. Right. So I'll move. But, the thing is like those specialty programs come with preset timelines from the program administrators. And it's like, we've
Yeah.
experienced with the down payment assistant, and listen, I get it. I totally get it when it comes to the buying agent and the selling agent and aligning on a schedule and all that stuff. And cool, kick and scream all you want that you don't want to have a COF this is the time frame, and the seller's going to walk away and the buyer's going to be pissed. And I get it. Jump up and down, beat your
When
chest.
you say COF, condition of
Sorry,
financing for the
condition of
people
finance.
in the back.
Yeah. Yeah, sorry. For those in the back, it's the condition of finance window. So that's that time frame of when like you basically have your accepted offer to get your financing all in place, and that you can go firm on your
Yeah.
deal and not risk losing your deposit. Because after that, whatever happens, you're out the deposit, right? So at
There
least
you
in that
go.
period, you want to know that you've got money, right? You've got a
Yeah.
bank on board to give you the money, and that should be the first past the post. But like with the down payment assistance program, they want like 17 days for a CO for that condition window, right? Now, has it happened in shorter time? Absolutely. But the 2% down program, if you thought down payment assistance was strict, there ain't no budget on the 2% down.
Yeah.
They
Yeah.
want 21 days, right? And now, is there a possibility it may happen faster? Sure, there's no guarantee. So that alone starts to tank deals because the interesting thing is, like, when you send it to the bank, typically we would, would have a complete package we send to the lender. The lender's going to come back to you and say, okay, cool, send me these extra documents.
Yep.
Awesome. I'll review and vet them, and then we'll tell you your broker complete. With the 2% down program, it goes to the bank. They have to have the perfect package at that point before they submit it to the next entity, right? So then there's like a board that reviews and makes the decision. Well, they're not even looking at it if there's anything outstanding. So like already the bank has to make sure everything's perfect. And sometimes it takes an extra week or two to get that information because a client may need updated documents or whatever the case is.
You can listen, you can go by this, right? How you can literally say how hard this program is to use. 12 people have been funded. 12 houses have been funded. It's been like, and the crazy thing is like, we did the home shows. Everyone heard about that fucking program at the home shows.
Yeah.
Everyone heard about that program. The amount of people that were like, oh my, like, because in real estate Jeopardy, one of the questions is, what is the minimum down payment? Oh, it's 2% now. No, it's still fucking 5%. But the program, that's some tomfoolery.
Well, and
So
it's amazing. Like I recently had a client who wanted to do the program, and of course I'm like, I cringe a little, but at the same token, they were on paper the exact client for the program, right?
Okay.
They were a perfect fit. But then it's the timeline, right? You go to them and you advise on the timeline, and of course I got the timeline directly from the bank that wants the timeline.
Yep.
Of course, the agent that's on the file got his timeline from a YouTube video from a real estate agent. So like that was obviously a differing of opinions.
Wasn't me.
Was not
Wasn't
you.
me. Was not me. Wasn't
Right?
me.
But like, so like that's a differing of opinions, and it's like, okay, cool. And so then all of a sudden it's like, okay, well, we're probably not going to be able to do that. So then the purchase goes into a different kind of direction, which is fine, but it's not an easy thing to get across the finish line, and that's why there's a dozen. Right.
So
maybe it's 15 now. Maybe it's 13 now, but it was.
I'm gonna summarize this super quickly. At the time you heard this quote, end of May, because I think you brought this up end of May, and I was like, we have to talk about this on the podcast we were going to record first week of June that we never recorded because life. The game-changing
lights out program that rewrote the rules.
Housing affordability in Nova Scotia has funded 12 home purchases inside of 4 months. Mm-hmm. Just like for context, I think Halifax, like HRM has sold like 10,000 homes in that time.
Yeah.
No, definitely not 10,000. I'm just being a dick.
But fuck it.
It's
like think of it across the province. If there was, let's say there's 1,000 homes sold across Nova Scotia. You know what I mean? Like if there was 1,000 homes sold in the province.
I think like 5,500 homes sold last year all in HRM. So you're probably like 1,000, 1,500, maybe.
And we're not even like HRM. Like this is a staff from across Nova Scotia. So if you go coast to coast,
either way,
it's probably even worse. Right? But it's probably even worse. It's probably like, okay, let's say like 5,000 homes sold in Nova Scotia for the last 4 months. Cool. 12 of them did it through this program. That's a real bad stat.
Yeah. So that program still sucks. To hear the rest of our thoughts, go back to an earlier podcast.
Yeah.
That program still sucks. It still sucks. It still sucks. Okay. The topic we've been waiting to get to, all the meat on the bone. Federal government announces it is doing a buyout of 2,200 vacant condos in BC. Where do you want to start with this? What?
I mean, it's the height of like, where does it end? Okay, so you're going to buy out the 2,000 to 3,000 units in Vancouver, which, like, let's not be fucking confused here. Those condos were probably $1 million condos.
Probably.
right? Like they're not cheap condos. And so now the government's going to step in and buy it so that the developer doesn't go belly up. Well, I'm sorry. That's the nature of the jungle. If we all like to talk about capitalism and the market and the free market, and if we build more houses, the prices will come down, and if we build more
Here he
inventory,
goes.
the prices will come
Here it
down. Well,
goes.
now all of a sudden, a developer, for whatever reason out there, built all these things.
It
It's the
can't be just
culling of the
one
herd.
developer. Like
No, no, no. It's several.
2,200 vacant condos cannot just be one developer just fucking
It's
chucking up condo
no, but
buildings.
it's like it's the whole ish. It's the whole system of like, okay, well, it's
Listen,
like full meal deal. We're building it, right? And if you build it, they will come. Okay, cool. But if you didn't do your market research at the time and it all falls apart, that's the nature of the beast. That's the culling of the herd. That is the free market working, right? So you go belly up. Sorry, sucks to suck, but also for the last how many years you've been out there developing, racking in cash on cash on cash on cash, you will not find me sad for you, Mr. fucking developer. I'm sorry. It's not going to happen, you know? And so then now we can't let them go under. So we're going to bail them out. But that's 2 or 3,000 units in Vancouver. What are you going to do with the 24,000 in Toronto? What the fuck are you going to do with the 24,000 in Toronto? Right? And like,
I'm
why the
not.
hell
Hold
wouldn't
on.
they just let it happen? Let it happen. Let it go to receivership. Let them fall, right? And then, because the market does what the market does, you sell them for a song and a dance. Okay, then if the government wants to step in, at least they're getting a deal. But you're going to them and giving them $3 billion, and you're like, oh yeah, well we're going to make affordable housing. No, you're not. You're subsidizing $1 million condo with $3 billion, and you could have put that $3 billion to work any other number of ways.
So I was waiting for that number to come up because the headlines have been federal government is spending $3 billion to buy out 2,200 condo units in BC or Vancouver, wherever the fuck they are. Um, Funny enough, the federal government has not actually announced what the purchase price is. The 3 billion being quoted is actually in the in Canada Builds Homes program for enabling for the 3 billion is a fund that is for building housing, enabling infrastructure, and lowering development fees. That is actually not the price being used to purchase these condos. They actually have not released that price.
That's going to be the interesting part. And then, and
Well,
because they're
if
thinking,
you
well, it's already built, so then we'll throw the money at it that we were going to use to build it and put it together anyway, and we'll
well
be
if
that
you
much further ahead.
Well, if you go further into it, because if you get to Daniel Falk was
Yeah.
on top of this, and so was Mike Moffat of the Missing Middle podcast. Um, they both said that the dollar figure has not been released yet, and neither Daniel Falk, and these are two very intelligent real estate contributors in Canada,
Oh yeah, yeah.
they cannot assess this deal because of lack of information. Because there is actually not enough they don't know. They know the amount of units being purchased for condos, and they know the federal government is doing it. They do not know the purchase price, and they do not know what the affordability aspect of the condominiums will be after it's purchased.
Well,
So
so that's
like
the other
it
thing. You're going to buy
like
them, and then like, who subsidizes that afterwards? Like,
like
then
it
it's
even
just a continuous thing.
Like, it even gets murkier when you, like first off, the whole 3 billion thing was like I was all over that rage debate too. I was like, 3 fucking billion, like, you're just once again, we called it a condo bailout for a reason because it's like, holy shit, we have been of waiting years for home prices to fucking cap out and for someone to eat it on
Yeah.
resale, and we thought it'd be condos because of what's happening in Toronto. We thought, "Oh my god, they just built too many of these fucking units. There's your supply. That'll be the great white whale that kills the market. And finally, we can
That's
bring
going to
back
be the
some."
start. Yeah.
Yeah, you're like seeing the blood in the wall, like, oh my God, we've been talking about for years on this podcast. In my life in general, all I've been taught is if you build more houses, you will have lower prices. Amazing. The market should be doing that. Then you hear Halifax is getting all record high finished apartment buildings this year. Record high new developments going on. Oh my God, we're getting supply. That price is going to happen. So then you start seeing in Toronto and BC of like too many condos on market, prices collapsing, buyers with deposits are leaving $150,000 deposits on the table rather than taking a negative equity asset. Oh my God, it's happened. Blood's in the water. And then the fucking federal government's like with a bucket. It's like a fucking life jacket.
Like, and listen,
come back.
yep,
We need more of you.
it's you're starting to hear, and I don't want to say the conspiracies, but you're starting to have people link it to like, oh, well, this is just the liberals, and this is, the former mayor of Vancouver or the area, is now the housing guy. So like, obviously he's jumping in to help, the folks that he was there with, blah, 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 blah. But like, to me, it's just like, you see it everywhere. Like, you can't be naive to think that local governments don't protect developers, right? It's like any industry, you know what I mean? Like, look at the oil sands. When you try to make a regulation, you try to do something to a big, large industry, the first thing that come out is, well, it's not going to be economical viable for us, and we're going to have to step back, and we're going to have to lower headcounts and lose jobs and everything else. So the sheer shock and potential of that rolling through the economy makes the government sit up straight and be like, oh, sorry, we're not going to do the regulations, and you win. Like, we don't want that risk. So the same thing with this. Right. I'm sure they look at it as like the construction industry and the jobs and everything in Vancouver. This has kind of helped that, because there is obviously a downside effect to when somebody crumbles. Right. But because look at the housing crisis in 2008. The government stepped in to help the banks bail everybody out. We all know that the banks in the States knew exactly what the fuck they were doing. They were cooking the books on the ratings, and they were just doing it and juicing it. And again, collecting the money, buying their yachts, and putting the rest of it up their nose. Sure. Right. But nobody
Which nostril?
Yeah, exactly. But they did that. They stepped in to contain the fallout so that the entire global economy didn't collapse, or there wasn't the repercussions after the fact. But nobody steps into the home buyers and be like, I see you're underwater now, Mr. Home Buyer in whatever small town. I'm going to bail you out. No, you bail out the big guy that started the problem. And so everybody's pissed off about it now. It's like, you're fucking bailing out this guy?
This guy.
This guy?
This guy.
This is the guy you're bailing out?
This guy. On a side note, just to add more fuel to this fire, BC urban developers come out against purchase plan. That one's fascinating to me.
The urban developers came out against this?
Yeah. So the province of BC has an urban development group, which by that title, you assume is a bunch of fucking developers, have released a statement that they are against the purchase plan of the federal government purchasing 2,200 condos. Now, at the time, you don't know what they're reacting to. Is it the $3 billion purchase price, or is it just the purchase price and or the purchase plan totality? Because the question would be is, first off, 2,200 units, right? Someone did some Twitter math, because that's where I love is my Twitter. It turned out to be like, God, if they were going off the 3 billion number that's being touted, that's not actually accurate. But if you go by 3 billion, how many zeros is in billion?
9?
Yeah, I think it's 9. Okay. If you go by 3 billion divided by 2,200, it's 1.36 million a unit, which I don't know about you, but that feels like market value in Vancouver condos.
Yeah, like the developer just got the government to buy out everything that they couldn't sell.
For value. So you're going to make your money back. I don't know if the BC urban developers are reacting to that number, but it makes me wonder if the BC urban developer is coming out against this plan of, you would think, if either,
because it's weighting the scale, right? Again, when we talk about the market, the market will the market will cleanse itself, right? Because again, these developers would go under, and they would go to receivership, and there would be a fire sale. And then all of a sudden these urban developers may have some type of justification for what they're doing, right? There's a market reaction there. But what they're doing is the government's coming in and thumbing the scale. And so now you've got these other developers who are like, okay, well, fuck me. Now this is going to go. So what am I incentivized to do now? Because now there's these,
Well, the other thing might be if you think about 2,200 condo developments, there's probably a few big players in that market. There's probably a few who are going to go under. And if you're looking at business to business, the BC urban developers might be looking at oh my God, that white whale's going down. I I get to start, like, there's market share for me to take in my company, right? So they might be looking at it as that way. The other thing they might be looking at is they might know the purchase price because we don't. Like, I know that 3 billion's been touted, but that's not what that 3 billion is for. The government has finally released a press statement saying that is not what that fucking number is. Not wrong number. We haven't released it yet. BC developers might know what that number is, and they just may not like it.
I,
Because,
I,
like, I can't,
I
yeah.
no, go ahead.
I was just gonna say, because, like, okay, listen, you can take aside all your political standings in Canada and who you vote for, who you didn't vote for, if you hate who you hate, and yada yada yada. Like, well, for all intents and purposes, like, you can make the argument that Mark Carney is not an idiot, and buying 2,200 condo units for $3 billion at market value seems like a pretty stupid thing to do when they're on the market not selling. Like, I'm like, there has to be more to this than just like Canada
Well,
buys
and
federal,
that's,
federal
and I
government.
think that's where you're starting to see people go down the kind of the route of like, this is nefarious. This is them bailing
Yeah.
out, the housing minister's buddies or whatever, or whomever. And, there's also talk about, well, a lot of these properties were laundering things and sheltering money, and it was overseas folks, and it was, you know, whatever. And listen, the whole reason why we have a foreign buyers ban in general
Is
is
that
because of what
is them.
started in
No,
Vancouver
it's
and people
them.
coming, you know what I mean,
It
coming
is
over and
the
pumping
whole
money in there
point.
to hide money, right?
The whole
Um,
point of a foreign buyer ban is Toronto, Vancouver.
yeah, and
And
I just
it's like the condos were the highlight of this, because like we talked about this on the podcast, like literally, like this was a very common strategy out of Toronto and
yeah,
Vancouver, very prominent from like 2010 to 2022. You buy a condo in first phase, wait for the building to be done. It's a minimum down payment. As soon as the unit's ready, you sell it for triple or quadruple, and you get your money out with an investment, with a profit, and you go again. Like, that was a
they were
very
reselling them
common.
before they were even done.
Yeah,
Like these,
yeah,
they
it
were
was a
coming in so
very
high that,
it was a very prominent real estate investing strategy in that decade, and people made shitloads of money. So, like, yes, the foreign buyer ban is entirely because of Toronto and Vancouver, and like, I'm sure the majority of it being the condos. So to see the condos go down, everyone's like, it was a nice feeling. Like, they didn't just like, it was like, oh my god, they're finally seeing prices come down.
because the rest of us have to deal with consequence. You and me have to deal with consequence. If I go up tomorrow and buy a super nice fucking vehicle and I can't afford it, or something happens and you know what I mean? Okay, cool. It's getting repossessed. My credit's getting hit. Like, I made a bad decision, right? And this is my consequence. Well, and the same thing works for them. Like, they kept thinking the party was going, and then the music stopped, and it's like, okay, cool. Well, guess what? You don't have a chair to sit in. So you're out. And I think that the local developers are probably thinking, okay, where's the support for us? These guys are getting bankrolled out of this. And by the way, it's not going to bankrupt the developer. There's, some of these guys got more money than God, right? So it's like that one project went fucking sideways. Yeah, cool. I'm sure they have a multitude of other buildings all over the place, probably in the same area. So it's like, it's just, there's no woe is me here for the developers. It just doesn't make sense. And then again, you look at Toronto. What are you going to do there? Yeah, you gave your HST rebate for a year. Cool. What are you going to do with 24,000 condo units? What the
That
fuck are you going to do
that
there?
hey, hold on. On that note, HST rebate program, that worked in Ontario.
Oh yeah, absolutely.
People
Like
are
it definitely.
buying
Yeah,
fucking
it.
people are buying fucking new construction in Ontario. Like,
Yeah,
that HST rebate, that did the trick. New
100%.
construction. Now, I saw a thing from Ron Butler. It's like new
It's not
construction
going
in
to help the
Ontario.
24,000 condo units that come up empty, but you're right.
Well, hold
It
on.
definitely spurred stuff.
I did say it solved the condo problem,
Yeah,
but it
yeah.
definitely,
It helps.
people are buying new homes.
It helped over here. It's doing nothing for the stock that's about to hit the market.
No, the condo. We talked about this at length on the podcast. Okay, you take out. Okay, the federal government has enough money to buy 2,200 units. Now, once again, we don't know that price, which is why I actually want to talk about that topic today. Because when I saw that, I was like, oh, this should be, because the headline is 3 billion. It's not 3 billion. But seeing a developer get bailed out, like, that leaves a very shitty taste in everyone's mouth.
Yeah.
Because you're always waiting, like the market, like, here's, like, we said this for years. The market the housing market got away from Canada in 2022, which is why they had to increase rates. Like, it just got away. The thing was a fucking disaster. Too many people writing bids. Everyone thought they could buy a house. Like, it got away from us. And the fallout of when a market gets too far gone is people lose money and people lose assets and people take a loss. So you start to see it in condos where you're like, oh my God, finally, like there's repercussions to
Well,
just greed.
exactly. It's the repercussion side of things. So here's folks now, payments are going up by $300 or whatever on average because the rates are going up. They couldn't affect the rates. It was the market. So like, but they're being punished by it. The delinquencies have gone up, sure, but the government's not stepping in to help out these folks. No, who do they step in and help? The big fucking developer who's got who's got a bunch of condos that he's selling for over $1 million and can't turn them.
Okay, okay. Listen, I think we both agree how you and I feel. I just want to play devil's advocate, though. Okay, let's just play devil's advocate for a second. Let's say we don't know the price, so I can't speculate on the price. But let's just say they turn these things into affordable housing. If you got the government-controlled, sanctioned, brand new built condos, which means they will not need renovations and updates for at least, hopefully 10, 15, 20 years, hopefully, right? And they can get these things at a song at some pretty cheap value. You could flood the market with affordable units. Would that not be a good thing for the real estate market in BC?
I have no
I know
idea.
it's too many. We do not have the variables to properly assess this.
Yeah, my thing is just like, how is that transaction going to happen? If the condo's listed for like $1 million now and can't sell, and the government pumps whatever amount of money into it to buy them out.
Okay,
so then you've got an asset that's like, you got an asset that's worth $1 million, but you're going to turn it into affordable rent or affordable apartment. So what are you going to sell it to somebody for like $200,000 and take a fucking $800,000 hit? Like, I like that's the part where I'm just like, what is your mechanism? That's not going to continuously pump more money into that building because it's got to be subsidized. Like the money's still real.
Right. So like and this is where you get into like, okay, at face value, if you supply the market with 2,200 affordable units, that can only be good for the real estate market. But then you look at the money behind it. So let's $3 billion gets you each unit for 1.36 million. Okay, let's just say that's the number for 3 billion. 2 billion gets you it for. All right, now we're gonna have fun.
Because I didn't even think I could. If they subsidize it, great. It'll be good for the end user, but also in that local market. Then all of a sudden, you're putting in these like weird expectations of what the value is, and like fucking with the ecosystem kind of a deal. And I think that's where you're finding the urban developers are being like, I don't like this idea.
2 billion is 900,000.
Okay.
Let's go 1.5. I'm just very curious what these numbers land at. Is that enough zeros? That's not. There it is. I've never done math with billions before. Okay, 1.5 is essentially like 750. 750. So, okay, let's say you bought all these condos at 750 for $1 billion. You won't. It'll be a bigger fucking number than that.
yeah. You watch it be 6. If it works, hey, if it's like our national shipbuilding, it'll triple.
But let's just say you got it for $1 billion, right? Every unit is 750. Let's just say that's 750. Great. I'll even do that math. Okay, hold on. We'll go 750 a unit.
You're having a time on the calculator today.
You know what? Yeah, 750 is 1.65 billion. Okay, so 1.650 billion. Okay, cool. If you did 750 and you bought each unit at 750, this is where you get into the math now. Affordable unit is what? In Halifax, affordability, they define it as like $900 a month or some nonsense.
Depends. Like CMHC affordability targets are like 30% of the median income for rentals, so it's like $1,247 a unit.
Great. Okay. So if median income, okay, so let's just say this. Let's just say affordability is $1,247 a unit, right? You and I both know if you are buying a $750,000 house, your mortgage payment is not $1,247.
Yeah.
Not even close.
Mm-mm. Mm-mm. Triple it.
Triple it. So triple it, you're at 3,600 essentially, 36,750 or whatever.
Oh fuck.
So
Well then, sorry. But then times 5 or 6. Sorry. Yeah. Because like 750. No.
yeah. So if you were to do it that way, so like it'd be like you pay 1.65 billion for 2,200 units. You rent it out at 1,250, maybe 1,300 a month to make these things, put these things in the classification of affordability. You're going to take a loss every month. These buildings need to be maintained. We all know how government facilities have lasted over 20 years. Lack of maintenance, lack of any investment. They go decrepit. They'd be knocked down and built again for much more money. I understand the thought of providing affordable units. And I can see how you get to like, oh, like we want to build affordable housing. There's a bunch of shit available that's not selling. Can we get these things at a price discount? Hopefully it's a price discount. We have no idea what the price is. Instead of building them, they can turnkey these things, get people in them right away, and ease pressure on the housing market. Like, is that not like what we're looking for? Is easing pressure on the housing market? Is that
I can
not what we're looking for?
listen. If we look at it that, we take out all the rhetoric of, oh, well, this is an inside job and this is the liberals and blah, 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 blah. I can see this, being one where they're like, we're trying to clear the inventory and we're trying to support the jobs in construction and, we're trying to make sure that this doesn't get worse in the area. So I can see, again, just like the 2008 financial crisis, it was like, it was a contagion. They wanted to step in. Nobody wanted to help the banks because they all knew they put themselves in that position, just like nobody wants to help a developer because we all know they got a fuck ton of money and they're the ones that should eat it when it falls apart on their dime. So I can understand that side of things, but somebody has to pay. Like there has to be some continuing subsidization of it. Like somebody's got to eat it. Somebody has to eat shit, and the government's stepping in so the developer doesn't eat shit. And so
Yeah,
it's
but
like,
then
great.
that means we eat shit.
That means the government does. And by the
Yeah.
way, the government doesn't have $1.75 to their fucking name. It's our taxes, right?
Right.
Like they don't. Yeah, it's our money. And so we're now going to step in to help them from eating it. And, and then again, I think for the guys, like you say, the urban crew in Vancouver, like we don't like this idea because they're like, you're coming in and you're messing with the ecosystem. Used to see those like videos back at like,
Do you think
those like the old dinosaur jungle videos where they're like somebody comes in and does one thing in the ecosystem and it changes evolution moving forward?
it's like when someone goes back in time and fucks with a bug and the
Exactly.
bug
Yeah,
changes
yeah.
that?
They fuck with the bug, and then all of a sudden, like, all the stuff happens. Well, it's the same idea. So now you've gone in and fucked with the ecosystem. So now it's like, okay, so now the pricing stuff is really kind of a fugazi because like what's happening over here is also being judged upon what's happening in here, right?
Do you not think the BC urban developers are against this buyout plan because they're terrified of what that purchase price number could be?
I very much, I would think that they're worried how it's going to affect what they are doing next.
That's what I'm saying. Like, I look at it from like if I was in that realm of like, it's back to what you hate about real estate. It's comps. if they fucking buy those vacant condos at a song, that just cripples every other developer in their condominiums in Vancouver who do not need to be bailed out. So like,
because everybody else is playing by one, everybody went into this game thinking there was a set of rules, right? Yeah. Fuck around and find out is the rule. You want to do a development, cool. Right? You want to fuck around and you want to do it when the economy is going in which direction the rates are going here and you're just kind of rolling the greed train. Find out, right? When it falls apart. But these guys are standing there being like, well, hold on a second. Like this throws in flux whatever we want to do because like now you've got this altered universe over here in this building of pricing that like.
Could Could you imagine if someone bought, if the federal government bought all South at Halifax for $500K, like per unit? Like, and what that would do to the real estate market in Halifax? Like, just like put that in the car, or like bought out Bedford at $500K a unit, like everything. Like, what would that do to home? Like, home prices would just like overnight categorically, like anyone, anyone that got a mortgage in the last 5 years would be fucked. Like,
Yeah,
fuck.
it will. Or, and like, again, like the negotiating power you have at that point is
Oh,
tanked.
you're, oh
Like,
God.
you've
Like,
got no way to negotiate then,
just
right?
once again, devil's advocate of like why the BC urban developers would be, because like 2,200 vacant units can't be good as a comparable. Like if you're building condominiums, you're building housing, and you just see 2,200 dead units not moving, not shifting, like that can't be good for your business either.
No,
So like to
but
see them sell must be a good thing. But then they're against them selling. So it must be like, okay, like what's your angle here? The angle has to be the comparable value. It has to be.
it is, because like, the 2,200 units is great. And, if they sell for way below and the guy has to take a haircut or it all falls apart, those developers now have information to be able to base their next decision on. Because again, it has to make sense for them to develop, right? And so now all of a sudden, the information they're gathering is weighted.
It's
It's
like
somebody came in and put their finger on the scale, like I said, and it's like they're like, okay, well, fuck, this isn't like, and so how do we justify what we want to do next when we've got this building over here that they just stepped in and fucked with?
I'll I'll put this into context, right? Because like for the comparable idea, I was out with house hunting trip this week, so I was out with one set of buyers for all the week, looking at houses, shopping around. Had a specific area in mind. Spent 2 days showing 15, 20 houses in that market, and we're getting ready to buy a house, ready to write an offer on a house. House listed at mid sevens, came down a bit, so low sevens. Uh, Really good. It's cash buyers, so pretty financially strong position here. Um, and we're getting ready to write the offer. We're coming in low because it's cash, as you do when it's cash, because you have leverage there in negotiations. Get a text at like 9 p.m. at night. Hey, have you checked comparables? Because like our daughter was on Viewpoint and she's found some really scary sale prices. And then my heart drops, being like, "Oh God, what did they find?" Because like you never know with comps. You live and die by comparables, as you hate. Um, so once again, the person selling this house is a very good agent, like very reputable in the industry, like knows their shit. So I didn't think I needed to check their pricing because, quite frankly, like I know them. They're good at what they do. They're great at what they
Yeah.
do. So wouldn't have to. But had to go look. They'd be like, "Oh, give me 20 minutes. Let me dig up comps." And you start digging up comps. And around this neighborhood, around the neighborhood, it's like this like 3-street little subdivision area. Everything around that little 3 streets supports the price. Probably supports a little lower on purchase price, but like they're in the ballpark. So like you can negotiate something there. Every sale in the subdivision, they're all they're all over a year ago, so way too long in real estate these days. But they all support something significantly less by like 60, 70 grand. So if you do the market analysis as I would run it to support the pricing on the most recent sales in the area support the price. But if you look at the specific 3-block radius or 3-street radius, you're like, I don't know if those that if I like we're pretty far off from like supporting that number. Well, I understand where a comparable for the developers might look, the urban
Are
developers
looking
of
at
BC
that being
might be
like,
like,
yeah, this just wrecked our
yeah,
plans. Yeah.
yeah, this
And
like
especially
you
like
guys could
look, so okay, let's take Greenwood for example.
oh
I've
Greenwood.
been to how many events in the last little while where somebody shows up, usually the mayor or some politician, and starts talking about the military spending in the province and the money that the government's going to pump into this place through the shipbuilding and everything. And it's like, boys, listen, the money for the shipbuilding that's just get that out of your head. The place is already working and rocking and rolling. The money that they're going to give to that is going to keep that viable for the next 60 years. I worked there for 5 years. I'm intimately aware of how money was spent and on what and why the prices has gone haywire of that project. Okay. But then they're like submarines and Greenwood and all this other stuff. And it's like, okay, cool. So if all of a sudden the government comes into Greenwood and says, hey, look at all that crown land over there, tear it the fuck down, and we're going to put in a subdivision. Well, what do you think that does to all the mom and pops developers and the guys that are down there trying to do the same thing because they see the economic activity that's happening and they got to bootstrap it themselves? Well, if the government comes in and does it, that just throws everything out of the water for them.
Yep.
Right? Just absolutely torpedoes their plans because, like,
and the leverage and their ability to get ahead.
Exactly. Right. Because all of a sudden now somebody's going to come in with super deep pockets, the government, and they're going to put the units in and they're going to be affordable because that's the mandate. But you, Mr. Developer, have to go and spend your money to clear, get ready, permits, develop, infrastructure, all that whole 9 yards, and still make a profit so that it was something that you could justify doing. And that's all out the window if that happens. And so that's what you're seeing here in BC with, I think, these urban developers that are just like, we don't like this because this is altering the market in their area, that
And
they have to play by a different set of rules.
You are literally altering the market through non-market means. And that just feels like cheating. It just feels like, hey, like, the fuck? We're all playing by the same rules here. Like, why do they get, once again, it depends on the price. It might, like, if they sell for $500,000 a unit, then urban developers in BC will be pissed for an entirely different reason.
But my thing too is like,
right?
So like, why is it, what makes it fair that the developer gets the bankload of money that they get, potentially whatever it is, and they get made whole on a piss poor decision? And yes, it's great that the next person has to pay for a song and a dance, but the rest of us have to pay for that. Like, we have to shoulder the burden of their fucking, stupidity. It's like they fucked around and we find out. Like, no, I don't want that. I want you to fuck around and you find out, not me. Like, I could have told you a while ago, you're fucking around and you will, it's going to come to a head. But now it's like, oh, wait a second, it landed on our head. And that's where everybody's just like tired of it. Like, everybody's just so done.
Once again, and this might be by design, is you don't have enough information. You can't like you don't know what the price is. And the price, like, I don't think anyone anywhere will like the price no matter what it is. Like,
I don't think anybody anywhere is going to care. I really don't think they are. As soon as you say anything that starts with a B, whether it's billions, bailouts, or anything else, nobody cares about the detail. All they see is a big developer wasn't allowed to fail. And like, the rest of us are over here being like, can somebody help me? Like,
meanwhile, the CRA is knocking on our doors being like, where's your money?
You know what I mean? Like, the CRA's out there fighting like everybody tooth and nail for CERB money that they sent to them willingly, with communication back from the end user being like, don't send me this money. And then being like, fuck it, we got to send it. We just got to get the money out of there. And now they're going after people that don't have $1.75. And they're like, give me back your CERB money. Oh, but hey, Mr. Developer, who's on a yacht somewhere in the Amalfi Coast, I got your back. I got you, bud. Like,
oh God,
it sucked. But again, you see, you'd be foolish to think that it doesn't happen everywhere. This isn't an isolated issue. It happens locally. We get developers bailed out all the time.
Oh yeah.
All the time.
Oh, yeah.
Like, they bought a piece of land and for whatever reason it couldn't work, and then all of a sudden they come in and they're like, we're going to designate this a special area for development because nobody
Bloomfield,
Sandy Lake,
Central Halifax.
Bloomfield, Sandy Lake, the watershed back by the Cirque. It's all these areas that a developer bought because it's like it was land, and then can't fail.
You need to take that salt and vinegar out of your mouth, buddy. You're very you're on one.
You started it.
I know. I should have just kept it at the 12 houses sold for fucking 2% down payments. That made us both happy.
Oh shit.
All right. Well, final thoughts on I guess like the best way to sum up the BC thing is like to be continued. Because like when
I'm curious to see if they do it.
Like when the details come out and if they come out, and if they pursued, like, when proper details come out, I'm sure we'll do a full pod on it. Just to be like, look at this. This is some.
Part of me
Uh,
thinks that it may change. Like they may not necessarily step in. I don't know. I could be crazy.
because
Again,
of public
I
reaction on
often
Twitter.
sound crazy, but I think the public vitriol may change the decision, right? Or I don't know. Like
Maybe they get them for $200,000 a unit. Maybe it makes them negotiate harder.
just let them go insolvent. Let them go let them fail and then come in for crumbs. Like that's a good business decision. You
Yeah,
know what I mean? Like
yeah,
we've had that. I've had that with developers in Ontario. We were shopping commercial deals, and it was a
yeah,
smoking opportunity. But the developer was in receivership, and the other developers came in. It smelled blood in the water, and
yeah.
so we had several people on the hook to be like, "We'll jump in now." But then we talked to one guy, and it was brilliant. He's just like, "Yeah." And when is the note getting called? I'm like, "Well, on these dates," and he's just like, "Yeah, I'll wait." And I'm like, "What?" He's like, why buy it now for this when I can wait for him to go belly up in 30 days and I'll get it for pennies? And I'm like, you're a boss. Like, yeah, I'm onto that. Let's do that.
Yeah, yeah.
Right. But that's what it is. It's again, it's the jungle. Like that is the market.
That is a jungle.
That is how it works. And
Why
like,
would I chase an antelope that has 4 healthy legs when I got this cripple over here?
yeah, well, I'm not going
Yeah.
to give you $100 million now. I'm going to wait for you to fail and I'm going to come
All
buy it
right.
for 30.
I'm gonna shift topics for one last thing for the last wrap up because it's been a while. We can pod for a bit. We haven't been able to give anyone a podcast in a long time.
That's right.
Um, I sent you a text earlier this week that we both laughed about, and I think I'm gonna bring it up here.
Oh, God.
What are your signs that the real estate market is cooling in Halifax? I will give you one. Halifax reached all-time high inventory levels in May to 3.8 months, which means we are almost in a balanced market out of a seller's market in Halifax for the first time in 7 years. So, what are your signs that the market is cooling?
Price drops left, right, and center, brother. Price drops left, right, and center.
Are
Turns
you
out
seeing? Do you
there.
watch?
I see it.
Huh?
I get a laugh out of it. I get every now and then. When I see a price drop, it's like, oh, and in my mind, an angel gets their wings, right?
Oh
It
my
just to
gosh.
me, it's like I think there's starting to be a reality check where it's like, oh, I guess no matter how nice the video is and how great I present myself in the video and how many AI generated things I do for my listing, that it
You hate realtors.
no, I do not at all. What I hate is the playing on the emotional side of things in the purchase. And so that's where I'm like, okay, then the reality hits and you need to get a price drop.
My sign that the market is cooling is I said this to you on text, but I'm also gonna say it again for the podcast, is how quickly realtors are calling me for feedback. Now, let me be very clear. I am notoriously bad at feedback. Once I show your house and my client's not buying it, I forget it exists. I'm just gonna be blunt here.
That's
I
fair.
understand.
It's like they're not buying it, so who cares?
I understand feedback exists because when I am selling houses and someone doesn't buy my houses, I call for feedback too. But I call for feedback after 2 or 3 days. I'm getting calls for feedback the same fucking day I'm showing these things. If I show at 10 a.m., the realtors call me for feedback at 4 p.m. Or they're calling me, or if I show a house at noon, I'm getting a text at 8 p.m. asking for feedback. And I just want to be like, hey, how much are your clients on your ass? Because, like, that's the only reason you're calling me. Because, like, in our automated system, we have showing time for our viewings. It's an automated system to schedule the viewing for feedback. I get you get a reminder every day, every 24 hours after you view a property. You get it for an hour. You get it as soon as the viewing's over to provide feedback. You get it for the next day, and you get every day after a text message, an email, and a reminder to do feedback. Like, there's plenty of feedback notifications that you get. They are calling, and they're calling. They're calling. They're not even texting. They're calling to be like, "Hey, how was your viewing? You haven't provided feedback yet. And I'm like, bitch, I'm still in the car. I haven't even finished the viewing yet.
Well, they also have they all have entrepreneur coaches, right? And so, you had to have so many
Is
outbound
that what
calls a
I'm
day,
missing in my
right?
life, an
Yeah.
entrepreneur
And
coach?
so I think, you get the coach and then she's like, how many outbound calls did you make today? So then they're trying to hit their quota.
That is not a fucking outbound call.
It
It's not an
technically
outbound
counts.
call.
Technically
It's not an
counts.
outbound call. If you're calling me for your outbound calls, you're calling wrong people.
That
Yeah.
in all seriousness, that is my thing where I think, I look at it, if I'm seeing price drops, I'm seeing, okay, in my head, I'm thinking, all right, well, that somebody went through that place and was like, no, not paying that. And then multiple people did. Actually, enough people that somebody in the deal was like, I should lower the price. And then it still sits. So that to me is where I'm like, okay, I think we're seeing not a ceiling or anything, but just like, the inherent financial strain on some of the price points.
Yeah. Yeah. For me,
You're
it's
like,
feedback. When
yeah.
realtors start calling me for feedback, something's gone
Well,
horribly wrong.
and I'm not exactly. That's because that's your side of the fence, right? For me, I'm just an innocent bystander. I just see things on the internet, and every now and then a client will call. I don't have the
Every
inside
now
track
and
like
then,
you do.
someone will call and complain about home prices, which is every day.
Yeah, yeah,
Every
yeah,
day.
yeah, 100%.
Okay. All right. That's all I got for today. Welcome back.
Yeah, no, this was
Welcome.
great. I'm gonna go out and try to find a development that I can tank and get bailed out on.
You're
I'm gonna
such a
I'm
dick.
I'm gonna go make a
Okay.
bad decision and see if the government will help.
But if you find one that's lucrative, call me.
Yeah, yeah,
If
yeah.
if the
Well,
buyout's big enough, I'll get in on it.
yeah,
All right,
yeah.
sir. Thank you. Leave it open so I can all upload.
Promise. Scout's honor.
Thank you so much for listening to the podcast. You can find our contact information in the show notes. Don't forget to subscribe. Thanks again.